Welcome again to our course on biodesign, Strategies for Innovation and Design on Bioengineering. We're heading towards the end of our course, and for today's class we're going to take a look at funding sources. So let's start. First, I want you to identify the different sources and types of fund that might be potentially available to you at the different stages of the innovation process. I want you also to understand the criteria used by investors to evaluate an investment opportunity and to learn some models used by them. I want you to understand also what a term sheet is and how their key aspects can affect a new venture. And finally, to appreciate the strategic value that investors can bring to any venture. So if we think about funding, we can have here an overview of the different sources of funding and activities that may be applicable to you depending on the stage of development in which you are. In this sense, we can have investment from stages from concept to liquidity, but it's important to acknowledge that those are not exchangeable, and you might not search for some of them in the stages in which you have other sources of funding available. Before exploring this, it's important to acknowledge that even at the very early stage of concept selection and product development, you can always search for grant funding, which in lay terms is called free money, and it's all these prizes and grants you can get from the government and from private institutions that are intended for you to help you in moving your product and idea forward. In this sense, when talking about funding here, we're talking about private funding, which is a concept that we're going to explore more as we move forward. In the first stages of innovation and in need identification, concept development, and some prototypes and business plan development, it's interesting, but the only source of funding that you may be available to find in terms of private funding is called angel. Angel funding or angels are high net worth individuals that just believe in your idea and that expect returns on a later stage of funding. When you move forward to build a company and have engineering feasibility and doing clinical trials and your final product development, all those stages may be funded by another source, which are called seed fundings. Seed investors are typically also high net worth individuals, but in different sense as the angels, because they not only believe on your idea, but they are expecting returns a little bit earlier, and also believe on the business model of your product. As we move then to phases on clinical trials and other type of testing that may be very, very expensive, we can start thinking on accessing to startup funding. And this is only after we have already proved concept that the technology works in the bench. In this sense, we can start thinking on approaching venture capitalists and also other high net worth individuals. But something really important to realize is that the startup funding, and every time that you involve yourself with venture capitalists, you are basically, and in lay terms, selling your soul to the devil. In this sense, you have to realize that involving yourself in funding with venture capitalists includes giving equity and some sort of control and observation rights to whoever investors you get involved to. In such a way, start thinking that when you want VC funding, you must be in a position in which you can cope with this type of surveillance. After that, when you start on moving forward with the company and having some sales and profits, you can start looking for expansion funding, which is called VC funding, Series A, B, etc. And this is funding that may range from $1 to $10 million. After that, when you are in a phase in which it's called liquidity phase, you may access corporate investors, and this type of funding is called mezzanine. Also, other types of VC series such as C, D, and E. But at the end of the day, this type of funding, it's only intended to grow your business a lot, and it may range from $10 to $30 million or even more. It's important to realize that when seeking for funding, the different stakeholders and funding sources are going to depend entirely on the amount of risk that your company has. As such, angel investors may invest from $10,000 to maybe $50,000, but knowing that the risk is very, very high. Seed funding may range from $50,000 to $250,000, but they know that even though the risk is really high, it has reduced since the angel fund round. And as such, startup funding, as we have mentioned, $1 to less than $1 million, and after that, expansion and mezzanine funding are stages of investment with very low risk. In these terms, you can see some of the things that VC investors and other types of investors actually look into investments. For example, angel and seed investors look for very high risk, but also very high risk options, but that also where the investment is really small. Also, it has the potential that if it becomes something big, they're going to have a stake in the company that is going to be way higher than in other stages. As such, VC venture capitalists may seek for very medium to low risk opportunities to invest, and as such you have to understand that if you approach VCs on a very early stage and risky stage of your process, it may be very infructiferous and you may even burn some bridges. With this, you have to know that every single time that you want to get investment, even if it's grant funding or private funding from all these sources, you have to think that someone, or in some sense, someone is going to perform a due diligence. And in terms of VC funding, this is especially important because it's a very known but also sometimes very complicated stage to perform. Many people actually don't know what it's necessary for you to compile in order to convince VCs to invest on you, and so here we have a framework that can help you on doing that. Investment due diligence is a process that may have at least 5 phases. The first is called the triage, which is a direct or indirect contact between the investor and the innovator. And this must be, it must be a really quick phase in which you approach the investor or someone recommends you, and you have to really quickly and really efficiently transmit why this opportunity is important and why your idea is in the need and also is worthwhile investing on. After the triage, and if you get the interest of investors, then an initial due diligence may start. An initial due diligence will start with a more thorough business plan, description, and not only an executive summary. It may require you to present some confidential data, though initial due diligence is most of the time managed with non-confidential data, and so try to prepare very thorough documents that compile what is important about your technology and your business, but without transmitting anything that you know you don't want to transmit without a non-disclosure agreement. After the initial due diligence, and if interest is still on the table, then a heavy due diligence may be performed. That is actually performed almost always under non-disclosure agreements with confidential financial, market, technological, and intellectual property data to actually assess the opportunity in the most thorough way. After this heavy due diligence, an investment decision is mostly performed, but not without actually creating what is called a term sheet. A term sheet is a general set of terms that both the innovator and the investor negotiate quickly and bounce once over and over again to actually get into a stage in which they know what are the basic points that must be met and which points are not allowed in the transaction, so that at the time in which you start talking to lawyers and to legal departments, then this process is more efficient. Imagine that you would want to negotiate terms with a legal document with all the legal jargon. It is as inefficient as it may sound now. And after an investment decision and term sheet is done, then the investment is closed. And this is done through legal documents that bind the company with the investor in some terms that are either economical or of cooperation or both. And it basically lays out what is going to be the relationship between both parts in this situation. And so, by knowing that, now that we know what the different types of investors are and what is the different sequence of events that are going to happen, then what could we resume are the most basic steps to find sources and to pursue funding in your biodesign process? Well, we can lay out this in 8 simple steps. The first one being validate the business viability. You are encouraged here not to approach any funding sources if you don't really know if the business that you are trying to pursue is actually valuable, and if you don't recognize what your competitive advantage and actual entry point to a market should be. Once you have validated that, then it's time to identify some comparable companies to which you can compare yourself, and even try to look for the same type of funding sources. After that, determine your company valuation, which can be done in different ways, but for doing that, try to assess and detect someone in the financial realm that can help you evaluating your company with some expertise on the medical device field. After that, confirm funding milestones and capital needs that you need, and that's something that you have to know yourself, and that's something that you have to be sure about when before and when looking for capital investment. After that, just try to exhaust any grant funding possibilities that you may have, because again, when you enter private funding, you are selling your soul sometimes to the devil, and you don't want to do that soon enough, and just until it is absolutely necessary. After that, research and select private investors that for which you have connections with, approach them and convince them through a kickoff investors plan, and through giving them a due diligence package even before they ask for. Okay, and with that, we have concluded our funding sources strategy module on this section. If you want to know more about funding sources and ways to capitalize yourself, please refer yourself to our biodesign group book. My name is Luis Soengsen, and thank you for watching.